How can you identify an asset price bubble? That's going to be the topic of today's video. Okay everyone, if you're an expat or a high net wealth individual in particular, go over to adamfire.com and see how I can help you. Now on this video, I'm going to talk about how you can identify an asset price bubble. It's not as easy as you think. A lot of people, they see a big number and they think, oh, it's a bubble. So for example, when Amazon stock was going up a lot of people thought, oh, it's a bubble, especially because Amazon's profitability wasn't going up, its revenues were just going up at one stage. But these days, nobody would really argue that Amazon's been a success story. It's incredibly profitable. Some people are even worried about it being a monopoly. Likewise, some real estate in some key cities around the world, a lot of people thought it was a bubble decades ago, but it kept going up. Maybe not as much as some people expected, but it kept going up. And likewise, the stock market, pretty much every year in history, people say, oh, it's a bubble. So it's not as easy as you might think to kind of identify a bubble. I would say there's 2 or 3 indications of a bubble. Number one is when pretty much everyone's talking about that asset class in question. Let's face it, most people in general society aren't usually interested in investing. They're not usually interested in talking about investments over the dinner table. Perhaps the only exception is property, because property is like a national obsession in the UK, Australia, and some other countries in Asia, and beyond for that matter. But when it comes to stocks or other asset classes, if your barber or taxi driver or somebody else is talking about stocks, that's not a good sign. Not if it's just 1 or 2 people, but if it's loads of people. I can remember a story from 1929. There was a famous financial expert. I forgot if it was one of the Rockefellers or somebody else, but he actually sold out just before 1929 because basically a lot of people were predicting stocks would go up, and they were even giving tips, including the shoe shine boy and other people, and that kind of spooked him. Now, I do not believe, as people who know my content, I do not believe in timing the market. But what I do think is, if you're in individual stocks rather than the whole market, if a lot of people that previously weren't interested in stocks are talking about that stock, that's not a good sign. It's not a sure bet that it's a bubble, but it's definitely an indication. So for example, let's say if your mum and dad, who have never talked about stocks before in their life, are talking about Tesla and I don't know, EV vehicles, that's not a good sign, as an example, or one example of many. A second thing is if the prices are going up too high for no good reason, and the prices are not in line with any kind of historical valuation. So for example, when gold, which I'm not a huge fan of, but when gold went up from about $200-300 an ounce in 2000 to about $1,900 in 2011, even though that's a huge rise, because gold was so weak in 2000 relative to its historical valuations, people forget that in 2011, the gold price was actually not a record adjusted for inflation. It was actually about 20-30% below its previous record high. So just going up a lot doesn't necessarily mean there's a bubble. However, if you have something like the Squid Games crypto, which was going up by thousands of percent before it went to zero, that's obviously a bad sign. Likewise, if you've got stocks which are going up by 700-800% despite the fact that they're not making any revenue, and the general stock market is going up by 10 or 20% for that year, that's not a good sign. In comparison, if you've got a stock that's been struggling for years, and before it was a titan, now it's turning around and it's doubled or tripled, that doesn't necessarily mean we're in a bubble. However, one thing I would say as a final comment is, as Peter Lynch said before, far more money is lost trying to time the market than actually in the crash itself. That's paraphrasing him. And one thing I have noticed is people who are most worried about bubbles are the least likely people, ironically, to profit from them, because they either try to time the stock market or they try to get too clever, like shorting stocks or doing something like that. But ultimately, if it was so obvious that Tesla was going to crash tomorrow, everybody would do that. As the saying goes, the market can remain irrational for longer than you can remain insolvent. So even if you do loads of research and you indicate or you think that, for example, Bitcoin or Tesla or whatever it is that you are convinced is in a bubble, even if you're proven right long term, it's irrelevant. You could be proven wrong for years. You could go broke in the meantime. So the people who actually do the best from bubbles, ironically, are people who don't think about it too much. People who don't get greedy, fear of missing out, but people who also don't try to get too clever about it. How can I help you? In two ways. First of all, are you an expat, a high net wealth individual, or just somebody who lives in a part of the world where it's difficult to get access to quality investment solutions? In which case, go onto my website on adamfayed.com and find out more. If you don't fit into any of those categories, then in which case there's a range of free material on my website, on this YouTube channel, and indeed on my Quora, where I get over 200 or have received over 231 million views in the last few years. And finally, if you want to actually read my thoughts in more detail, go onto Amazon and find my book on there.